Welcome back. Well, the broader markets are definitely doing better. So up around 0.7% currently for the mid-cap index, which has picked up pace. We have a good advanced decline ratio on our hands, which is holding steady at almost, I think, around 2:1 to be fair. So 2,400 stocks are advancing to around 1,071 stocks declining. So that's the gap, which is extremely wide, and let's see whether that maintains. We have Sacchitanand Uttekar of Tradebulls joining in to talk about the technicals of the market. Sacchitanand, hi, welcome to the show. Well, good day for the markets. Resilient, you'd have to say. Mid-caps doing better. What's your approach?
Good morning, Ekta. Clearly, I think there is a good relief, after 4 days of continuous selling, and the Nifty has, tried to, reconquer that mark at around 22,300. But I think if you look at the overall data set, especially, the trend looks a bit, bearish. Until unless we don't see the Nifty, establishing a close above the 22,320 mark, the trajectory would be on the sell side. So probably, every time we move towards that 22,270, 260 marks, I think we may see some selling pressure there. So I think it's a good texture on the sell-on rise mode, and that's why we believe that Nifty could eventually slip towards 22,000. So at least for the day, the hurdle at 22,300 may not be breached. On the lower side, we may see the expiry shaping up somewhere close to around 22,180 or 22,150 itself. So I think it's a good time wherein every opportunity on the higher side should be utilized to create some shorts.
It'll be interesting to see, Sachi, because on the way up, as you mentioned, closer to 22,300, we have the 20-day moving average. And at lower levels, we have the 50-day moving average as well, with expiry in the second half. How do you play this market via stocks then?
Good morning, Mangalam. Mangalam, I think DLF and some of the real estate backed stocks are showing signs of weakness. And DLF, especially if you look at the weekly structure, it was showing a negative divergence. The effect has just started rolling out now. We saw a gap down opening during this particular week, and that particular gap is still sustained. Even here, there's a negative convergence on its 5 and 20 exponential moving averages, and that's why we believe that going forward, the stock may step towards 840 kind of a zone. We have recommended this position to our clients as well. That will be a disclosure. Keep a trading stop loss at around 882, and fresh shorts can be added on DLF. Immediately, we may see a swing towards 855, 860, but positionally, I think this particular move may extend towards 840. The second idea on the short side, wherein the trend has been very strong on the bearish side, has been Jubilant Foods. We have seen some consolidation here near the particular level of around 430, but I think eventually we may see this particular bounce back that we have seen again getting sold down to. We're expecting a price swing towards 420 levels, and that's why, again, this particular bounce back can be utilized to create fresh short positions. Keep a stop loss at around 456.
Okay, all right, Sacchitanand, we're going to leave it on that note. Thanks very much for joining in and speaking with us. Well, we need to take a break, but as we do that, we have an announcement.